Welcome to the Business Finance Bulletin, episode 233. Welcome again to the latest Business Finance Bulletin. With me, Rob Warlow from Business Loan Services, the commercial finance expert. In this bulletin, budget boost for the provision of finance via the British Business Bank, Iwoca and Lloyds strike open banking deal, and insolvencies on the rise as economic conditions tighten. As I record this bulletin, we're in the week where the budget for 2018 has been announced. Yes, Chancellor Hammond has stood up and kind of laid his cards on the table as to what he's planning from the tax year April 2019 onwards. Now, I'm not going to bore you with all the detail that's been reported enough in the press. I want to focus on the provision of finance, particularly finance being made available by the government to the British Business Bank. Now, the British Business Bank is an umbrella organisation and home for all of the government's finance-related schemes. And the Chancellor has announced that obviously many businesses are a little bit concerned about access to finance post-Brexit. So the Chancellor has confirmed what kind of support he's going to be giving to the British Business Bank from 2019 onwards. First of all, start-up loans. Now, the British Business Bank is the body that oversees the start-up loan company. There's a very good service for business owners, as it says on the tin, who are looking for start-up finance. You can get up to £25,000 per individual, up to a maximum of £100,000 for 4 directors, and that is repayable over 5 years at an interest rate fixed at 6%. Now, the scheme has been very successful and we've used it a number of times to help clients, and we're pleased to hear that the Chancellor has announced that funding is secure up until 2021. So it's good news for business owners looking for start-up finance. The next scheme that they've announced is an extension of their Enable Guarantee Scheme. Now, the Enable Guarantee Scheme has been providing guaranteed support to alternative lenders and smaller lenders who perhaps don't have the resources available to support businesses. The Enable Guarantee Scheme allows them access to finance. Well, this scheme has now been extended by a further £1 billion for an Enable Guarantee Scheme for SME house builders. The government realises it's important to continue house building to meet demand. So that's going to be good news for smaller house builders who traditionally find it a little bit harder to get finance when it comes to supporting development. And lastly, access to finance and the EU. Now, there's the European Investment Bank. Now, the European Investment Bank does support indirectly many businesses in the UK. And obviously, there's concern about, well, what's going to happen post-March 2019. Well, the government has said that if they can't secure an ongoing relationship with the European Investment Bank, they will step in and give the British Business Bank up to £200 million to continue investing in equity and growth finance in 2019-20. So good news there from the Chancellor, and really good to see that they are planning extra support for businesses post-March 2019. The Business Finance Bulletin, episode 196 in January 2018, I made the first announcement about open banking and how that was going to be revolutionising the way that financial institutions interact. Now, a quick resume about what open banking is. Essentially, at the moment, banks really have sole control over your data. So what goes on in your bank account is not available to other financial institutions unless, of course, you download your bank statements and give it to them. Well, one of the things about open banking is it will allow third-party providers, with your permission, to automatically link up to your bank account so they can view your transactions without you having to send copies of bank statements. It makes the whole process of third parties being able to provide you with finance much slicker. Well, Iwoca, which is a short-term loan provider, has just announced that it's done an open banking deal with Lloyds Bank. So it means that if Lloyds Bank customers are going to Iwoca for short-term finance, all Iwoca will have to do with your permission is automatically look into how your bank account is run. No more need to send bank statements. It'll make it much slicker. Iwoca have announced that they're also very close to making deals with Barclays, HSBC, RBS and Santander. So it's really one of the first alternative lenders to be able to say that they are now striking all of these deals with the main high street bank. All designed around making access to finance that much easier. That's really what open banking is all about. Let's close this bulletin by taking a look at the latest figures from the Insolvency Service as regards how many businesses entered into an insolvency arrangement in Q3 2018. Now, the figures, unfortunately, and perhaps not unsurprisingly, don't make particularly good reading. The figures have shown increases across the board. So in Q3 2018, there were 4,308 businesses that entered into some sort of insolvency arrangement. Then Q3 compared to Q2, that was an 8.9% increase. So this third quarter has seen more stress starting to come through. When you compare the same quarter 2018 to Q3 2017, that's seen a 19.3% increase. So a very significant jump in terms of businesses entering into an insolvency arrangement. Which are the sectors suffering worst? Well, construction, that's the highest suffering one. Secondly, wholesale and retail trade. And then in third place, vehicle repair groups. All of those are really starting to show signs of stress. So if you are in a difficult financial position, what should you do? Well, of course, it's all about seeking appropriate advice and support. If your position is bad enough, you really need to seek out advice from a licensed insolvency practitioner. All you have to do, go to your favorite search engine and type in insolvency practitioner and your area, and there you'll come up with a list of licensed practitioners. So not a particularly good time, and obviously we'll wait with bated breath to see what Q4 2018 brings, and I'm sure it's not going to be much good news either. That's it for another bulletin. As ever, I hope you enjoyed watching it, and if you did, please don't forget to give it a like and a share. It all helps. So that's it. Thanks very much, and look forward to being with you next time, and have a great, successful and profitable week.